Well, when you think about how far Indian equity markets have come, there is one man who sounds synonymous with this journey of India equity markets. And that's Raamdeo Agrawal from the Motilal Oswal group. And today on the interview with me, Aisha Faridi, he's sitting here right beside me. Raamdeo ji, thank you so much for taking time out and speaking with us today.
It's always a pleasure talking to you.
Okay. And you know, I was just thinking the other day that one of my fondest memories of you are the last time when we met and you showed me that Coca-Cola bottle that you picked up, Coca-Cola bottle that you picked up from the first AGM at Berkshire Hathaway that you attended. And I remember you questioned me and you said, you know what, you can also become Warren Buffett. Today, if someone has to become Warren Buffett in this India, what's the message to that person?
Yeah, so anybody can become Warren Buffett, but you need that drive, the discipline. I think he's one of the most disciplined investors. See, he's a great human being. First thing is, he's a great human being, great teacher, and very driven guy, you know, in the sense that he wanted to make money right from beginning. And he found the stock market, insurance and all to make money. And then the model kept on evolving. Actually, he committed mistakes and he learned a lot of it out of his mistakes. Buying Berkshire Hathaway itself was his biggest mistake, you know, which was corrected with the help of Charlie Munger. That's how both of them came together. And then from the cheap profitable company to high quality, reasonable price companies. That twist built, and that's why in his tribute when he passed away, Charlie, Buffett wrote that he was the architect and this guy was the general contractor.
But in today's India, if someone really has to get that kind of wealth and wisdom, because the two go hand in hand, where can one begin? And would you say
market?
In the India equity market journey, in the next 40 years, can one really get there? Where do you envision India in the next 40 years?
Yeah, so 40 is really long, but if you do 40, then numbers will not get into the head. But I can tell you 25 years for our Viksit Bharat. We call it Viksit Capital Market for Viksit Bharat. Okay, so we are at about $4 trillion GDP, $5 trillion of market cap, and we've done very well in the last 25 years. I mean, despite all the criticism and ups and downs, we've done very well. Our market cap has grown at 13% dollar. 13% dollar for last 25 years. And our GDP growth has been 9% dollar. If we just keep the same pace, you know, I mean, it's very difficult to keep the same pace on a higher base. But I don't see any reason why this same pace cannot be kept. You know, about 6.5%, 7% kind of a GDP growth rate with 3-4% inflation. And the kind of activity we are seeing in the stock market, that gives me optimism that 13% dollar growth or 15-16% nominal, 15-16% nominal market cap growth, that will continue. Now, what that will mean is that in next 7 to 8 years, you will be going from 4 trillion to 8 trillion GDP, and 8 trillion to 16 trillion by 2040, and 16 to 32 trillion by 47, 48. That's the kind of journey. That's the mammoth journey. It is, I mean, when you reel out the number, that itself looks, is it possible? Is it possible? But it will all happen. You know, when you climb the Himalayas, you don't have to look at the peak. You have to look at the next 10 steps. So I think that's a game, and India has been doing very well. Our economic management has been very, very disciplined, and we are shooting at about 6.5%, 7%, 7.5%. With this now, the consumption boost we are going to get, I think that should push it by another 0.5% or so, but jury is yet to be out. And so I think keeping in mind 6.5%, 7% real GDP growth rate and dollar GDP growth rate about 9%, that will do the magic. So I have seen 45 years of this market. You're asking the next 45. I don't see why it will not be as exciting, or rather more exciting, you know.
So Everest base camp to pahunch gaye. But next 10 steps, how are they looking? Because, you know, at the micro level, if you see in terms of a market, index has done nothing in the last 1 year. Lots has happened beneath that, yes. But, you know, FIIs have been selling constantly. Okay, I get that reaction.
Why are you so buried? I can't figure out.
But why are the FIIs in the last 1 year not identifying that?
That is their loss. Who made money? We made money or they made money?
Yeah.
We made money, isn't it?
Absolutely.
So that's what really matters. Why are you concerned about them? They will figure out why they didn't come into here. Why should we bother about them? See, you have to create a... See, they have multiple choices. They can go to US, they can go to China, they can go to various 170
Wherever.
markets. I have decided to stay here. So this is a very different kind of situation. So my market has to become competitive in terms of valuation. That's how they look at it. That's how they look at it. Because macro allocations are, I mean, India is still 2-3% in their scheme of things. They are busy with America or Europe or whatever, bigger markets. So when we actually become relatively very, attractive, they would come. Without asking, they'll come, I'm telling you. You drop, let the market come to, say, sub 20p. Right now it is 22p. Let the market come down by 10%, not by actual drop, but valuation-wise.
Valuation.
Say 6 months more, and my earnings shoot up by 20%, and then obviously they'll be there. You see the subsiding of selling, and suddenly they'll start buying. And good thing is that China is going up. So now the relative table, I was here, I'm standing here, they have come up here. So at some point of time, we will look
go up. Yeah.
my relative attractiveness.
Allocation.
Because ultimately, I'm the fantastic story. They made all-time high in 2007, and still they are below 2007. So in 15 years, they have gone nowhere. I'm up 10x. So people don't forget that. See, stock market system is way beyond just the GDP growth rate. Markets are very, very complex machine. There are only two compounded markets in the world. One is US and second is India. And I would think in next 25 years, I would rather bet on compounding for India than US because they've done too much out of the future.
You think in the near term, what's also sort of weighing heavy from the FII perspective is also the entire tariff issue?
Yeah, well, this things goes on. I mean, see, some geopolitical issues, I mean, we are living in a very complex world.
Yeah.
So yes, what you're saying is right. But only one thing doesn't happen. Simultaneously, many things happen. You have GST cut. You're not counting on that. Oil is at 65, 67. Yeah. I mean, we are 60, 70%, 80%. We are dependent on imports. That has come down by 20, 30%. What is the gain in that? So I think the markets are all about aggregate. And at the end of it, if earnings go up, nothing matters, I'm telling you. You grow the earnings by 20, 30%. Who bothers about what's the geopolitical?
Do you think the GST rationalization will be that trigger for earnings?
It is definitely one of the triggers. See, it's a Lollapalooza effect. Growth doesn't happen in economy or corporate earnings by just one factor. There is always some opposite factor or subside. So first it started with the tax-free, the direct tax reduction. In the budget, they reduced from, the tax-free limit went up from 5-6 lakh rupees to 12 lakh rupees. Now up to 12 lakh rupees, which is 75-80% of the population in India. Now they don't have any indirect tax also. Direct tax aapne zero kar diya. Now indirect taxes from the GST, this is literally 5% or zero. So what are you saying? It will be extremely moderate taxation for whatever you give it to your support staff. So that's the nation actually. That's the nation which consumes. And then on top of it, you're saying now there will be credit growth. See, one other thing which happened was, I don't know why policymakers did that they brought down the credit growth from 18% to 8% on the eve of election. Probably it was to control the inflation on the eve of election. But when you bring down credit growth, see, GDP growth is equal to credit growth. If you don't have credit growth, do whatever. I'm very clear there is not going to be any GDP growth, sustainable. Sustainability, you cannot grow. You have to be associated with good amount of credit growth. Now, credit growth machine has been completely
turned off.
Now they are trying to bomb it up. So it took 1 year for it to bring it down to, say, 8%. It will take another 1 year for it to go back to 13, 14, 15%. So 8 going to 15, you imagine what is the kind of acceleration we are talking about on a higher base. So I think these are things which keep happening. Some pluses, some minuses. But then on top of it, you have this Trump tariff issue. They'll also pass in the sense that we'll have a nice agreement in 3-4 weeks, 5 weeks, I mean, whatever. whatever you read in the paper, I also read that. So the guys are engaged, talking to them.
Of course.
Even Mr. Trump is also, President is also engaged in trying to see that they have
some resolution comes out
of it. So both the friends, they come together and meet and figure it out. So 3, 4, 5 months, yes, I mean, this kind of plus minuses will go on. And we have done very well. On 1 year, see, I don't look at 1 year basis, look at 5 year basis. Do I have rolling doubler? That is what we keep talking. In every 5 years, we should double the index. And then individually, you might triple
but
or whatever.
Last 5 years was an anomaly, right? We're talking about a COVID base, sir.
No, post-COVID. Now we are talking about 21. We're not about 20.
Sure, okay.
From there, we are 3 times.
Yeah.
But COVID bottom was 8,500. From there, you are 3x. But leave aside that. I'm talking about, say, this is September 21. By that time, market has recovered fully. So from 12,000 to 24,000, we are 120% up on a 5 year basis, rolling. That's what I keep saying. So I think 120% also a little more. We should be at about 100%. So bit of froth is still there. Out this, it can stay here for some more time till the earnings pick up. And now earnings engine has also been fired up. So I would think maybe 6 months more before market gets onto the new energy. By that time, hopefully, this GST issue is fully fully tracking. Consumption picks up. Your credit growth comes in. Your duty issue is also sorted. I think there's a lot happening.
No, lots happening, absolutely, like you said, and the RBI, government, the entire machinery is actually ensuring that domestic demand stays put. Do you think the first signs of revival will then come in from banks, NBFCs, and consumption?
I mean, see, 22nd means what? See, I think there is because of this announcement on 2nd and 3rd and then 22nd to be implemented. So that 15-20 days has created a lot of what I would say, discontinuity types, where the consumer said, boss, why should I buy unless I get that 10%? So, but then it's an economy, large economy. So there is a kind of a dislocation for the quarter. So September results will be impacted negatively and companies are guiding that. But you speak to the automotive guys, dealers and all, they're saying, sir, we are stock out. I mean, starting first week of October and all, I just spoke to somebody. And they are saying that we'll not be able to get enough supplies from manufacturers to meet the demand. Now, is it one-off or is it going to sustain? So that part you'll be able to see after 2 or 3 months. I mean, see, one thing is for sure. If something is growing at 5%, it will grow at 7%, 8%. My sense is whatever is the loss of revenue because of this GST reduction, it will be more than made up in less than 12 months.
The input tax credit adjustment you're talking about.
No. Just the GST collection. So if you're getting, say, 180,000 crores per month, and it is reduced by, say, 10,000 crores per month because of this reduction, it will be more than made up by higher volume consumption in less than 12 months.
Higher demand. So, autos, yes. I think the markets have already somewhat factored that in. All the auto stocks have been up. Where else do you think the GST rationalization benefit will come in?
All sorts of, see, like insurance, zero. Can you believe? See, in consumption, what happens is, everybody has very limited, purchasing power in their hand. Now, how do they redistribute? I'm not in that mindset to figure out when I get 7,000, 8,000, 10,000 rupees more per month, where exactly I want to exercise that option. Will I buy more ice cream? Will I buy a motorcycle? Will I buy more
clothes or lipstick?
Clothes, lipstick and sweets, or will I buy, because there's so many claimant. So many claimant. Then on top of it, the SIP is sitting. SIP wants to take so I think you have to look at the aggregate large number, where exactly it moves, and that's why, because the claimants are also too many. So which sector, where the discretion will go, automotive is very clearly visible, because roti, kapra, makan and gadi. So roti, kapra,
mobile phone.
The mobile, no, but that's already been paid for. So I don't think, they may also get some $100, $200 from here. But but consumption overall will go up for sure, because more money and the propensity to consume at that level is the highest. They consume 100%, 120%. And for making it 120%, now you have credit flow. I hope now they don't commit the mistake of bringing it down to single digit and all. I mean, we must exercise the full power of 4, not even 4, go up to 4.5%, 5% kind of sustainable inflation, 4% inflation, whatever is the band they have been given, 4 to 6. So we don't go below 4, and of course we don't cross the norms of 6%. So given the inflation level, then you buy the growth. So I think that's what government has done, but market is impatient, you know.
Yeah.
So, yeah, market is impatient. But that's okay. I mean, few months we might be here, and that is good.
But the market, I feel, is somewhat also confused about whether staples will see more traction or not. I mean, you will not start eating more sugar and more biscuits just because they're
Why
cheaper.
not? I mean, see, Aisha, at your level, you whatever number of biscuits and chocolates you want to eat, you can purchase. But not at, you know, this mass level. Mass level for them, it is aspirational to buy and upgrades. You know, if you're eating, say,
Parle-G, you will move
you
to,
move it to
cookies.
Yeah, cookies or Good Day or something else. So that's what I'm saying. I don't know how the consumer is going to use that money. Gaddi is clearly visible. You know, the automotive, you know, like people buying instead of 110cc, they'll buy 125. The aspiration is always, aspirations run way ahead of how much one can afford.
Yeah.
And that is supplemented by easy credit. So credit, I'm telling you, if the credit flow is not there, everything will come to naught. So very easy and sustainable credit flow, along with whatever measures they have taken on a fiscal side. Monetary help is very important. When monetary and fiscal both will come together. And now we have a wonderful monsoon. In fact, a little more.
Yeah.
More than 106%.
Yeah.
So I think now the monsoon is coming to an end. I think busy season will start big time. And my sense is next 6 months will be worth watching in terms of what happens to consumption story. And it will be a story to be learned by the bureaucrats that, okay, let's not have a very static taxation. You must respond to the whatever is the, and they responded very massively. So I think it will be extremely interesting to see the consumption space. I would think that consumption space will pick up, and you watch the stocks, whether it is automotive stocks, whether it is FMCGs of the world, people have forgotten there are companies like Nestle, Lever and all that.
Yeah.
But just keep watching them. You'll be surprised.
But does that also mean that as an investor, if I'm adding more to the consumption basket, what do I do about capex? Because till 2 months back, everything was about capex.
No.
Does that take a back seat?
No. In fact, why the private, see, one of the biggest machine in the economy is the private capex. Why private capex is not happening? Government keeps complaining. Why don't you put up capacity? Why? Arey bhai, mere paas demand hi nahi hai. If I have a capacity for 5 million bikes and my demand is 4, what do I do with the 6 and 7? The moment my demand goes to 5, they will be in a hurry to put it up. Look at Maruti. They put up three plants in how many years? 40 years. I think 1985 and now. In 40 years, they put up 3 plants. 2 more plants are coming in next 2 months, 2 years. So they could see that this demand is coming. You know, so clearly the private capex will happen in a big way. I don't think consumers will have problem getting stuff so long as there is a demand. And that is going to fire up the third engine of the, I mean, government capex is on, now consumption is on, third is the private capex. And that, I think this jugalbandi of sustained consumption, sustained private capex, and of course government is doing heavy lifting of infra spend. I think we are in a solid situation. That's how I look at it.
He's always optimistic. And look how well he's done for himself. But tell me, you know, like you said, that SIPs also, for the wise ones, they'll be like, acha chalo, extra 1,000 rupees, let me put it in a SIP. The capital market scheme, which has been a darling personal favorite of yours, that remains intact?
Aisha, we got political independence in 1947. We got financial independence in 2020. I'm telling you.
Yeah.
This is a new story altogether. If we don't mess up, if we continue with this, the retail flow is wall of money. Today we can, I mean, my currency is stable, my markets are stable. It gives my government a confidence to negotiate with the world because there is a market size stable. You know, if markets are tanked, it becomes very difficult. And that is because of retail money. So this time, all the risk of the economy has been taken by the retail money. Irrespective.
Asli hero.
Asli hero is that. Look at the IPOs which are happening. Unprecedented. 79, 80 IPOs in 6 months.
And the subscription numbers.
Subscription numbers.
Yeah.
Everything is a bit, I mean, you find where's the newspaper?
Yeah.
First 4 pages, you know.
Are
you
all
have to,
IPOs.
Yeah.
Yeah.
In fact, I'm trying to figure out when I get my 6 newspapers, I said, which is the
News kahan se hai?
newspaper? No, which is the newspaper which doesn't have a cover, you know, IPO thing, so that I can read the front page.
So that's that. But what can spoil the party for retail participants? You think too many F&O curbs, more cases like Jane Street? I don't know. I'm just speculating right now.
There is no earnings here. Then you do any, even if it is a hourly expiry, forget about daily expiry, money will not be made. You know, so I'm talking for the investors. And of course, somebody gets hurt. I mean, if you from daily expiry you go to weekly, and from weekly to fortnightly and to monthly, you're shutting the markets. So obviously the capital market players like us will definitely get hurt. But what is right for the nation
Is right.
Is right. If there is excessive speculation, it must be curbed. So 1 year till the curbing happens, obviously the participants, thoda sa antar padta hai usme. But after that, again this 30% compounded will come. Because the flow of money, I mean, we are getting about what? Less than 1% of GDP. Less than 1% of GDP. My GDP is 350 lakh crores. So my 1% is 3.5 lakh crores. Despite this boom in IPO, it is still not a percentage.
Yeah, there's still so much to go.
So much to go. And you see the confidence among the entrepreneurs.
Yeah.
I have an idea. So now it will flow down from secondary market to unlisted market to venture. If you are a smart team, you have an idea, getting $1 million is not very difficult. So that optimism is there. And I think, see, when you have this kind of changes, this is historical changes. Like I remember in 92 when the industrial licensing was abolished by Manmohan Singh and all. Of that, that was the big reform. You know, I think the biggest reform, if I can think of. And we are living off that, because then everybody can put up, if you want to put up 100 million ton cement capacity, you can. You don't have to go to the government to figure out 500,000 here or there. So that has done one deregulation. Now, with the influx of retail investing on a 5 minutes onboarding, ease of digital infrastructure is there, people are coming. It's a complete change, you know. And this change is, for the commercial terms, if we harness this power of retail money for allocation of resources to the right kind of industries, and our regulators are very good. They cannot see misuse of the capital, you know, and markets will decide whether a company has misused or used it. The guys who have used it well, they'll be rewarded. The guys who have misused, of course, they'll get the scolding. So I think we are into a, I would not say using the word abundance, but very, very comfortable capital availability situation for entrepreneurship. You know, so, and once you have the equity, banks are there to give you. So what you need is the entrepreneurial determination and ideas. And this is a large country. You get ideas. You have to see how the 10,000 bucks
plays out,
where it goes.
And tech, the
tech, of course,
new emerging theme.
Yeah, so tech is like more tech-enabled businesses, like this quick commerce and whole lot of even. So one of the big opportunities going forward in next 10, 15 years I see is the tech-enabled businesses. The tech itself, I mean, if you have digital, or say this, all this quick commerce and digital companies which are coming. You see lots of, I've been meeting, even yesterday I met quite a few companies, and in Bangalore I was there. Very exciting stuff is happening. They are yet to make serious money, most of them, but they have scaled up to 2,000 crores turnover, 3,000 crores turnover, breaking even, or bit of, they're struggling to, what you call, very quickly grow up and all. Because fundamentally in this digital businesses, there is no capitalization. The cost of acquisition is being written off every day, and that makes them bleed for some time. And that's where I think people like us who are old school, we find it very tough to appreciate their, what they can do in the next 5-10 years.
Thank you for your time today.
No, thanks for hosting us.
Thank you.
Thank you.